That is why traders introduced Fibonacci series into trading. And the Fibonacci series, as you saw from the rabbits and the honeybees, it goes like this: 1, 2, 3, 5, 8, 13, 21, 34, 55, 89, 144. And this is the 100th number. How big is this number? Only 100. Yeah.
Yeah.
Means if you allow the rabbits to grow, they will produce in 100 months these many rabbits. So mathematically, it can be represented as Fn equal to Fn minus 1 plus Fn minus 2. That means what? 55 is equal to 34 plus 24. 144 is equal to 89 plus 55. 13 is equal to 5 plus 8. Each number can be generated by adding the previous two numbers. Yeah.
So for instance, you've got 0 and 1 is 1, and then 1 and 1 and 2 is 2. Yeah, okay, I see.
1, 2 is 3, 2, 3 is 5, 5, 5, 5, 2, 3, 5 is 8, 5, 8 is 13, and so on and so forth. Yeah.
Yeah.
Now, so now after knowing the number, we'll come to the Fibonacci ratios. All the Fibonacci ratios are derived from golden ratio. If someone is coming tomorrow and telling you that I have got a new Fibonacci number, don't take it. Ask him or her to derive it from the golden ratio. If he or she cannot derive it from the golden ratio, then dump the number. Okay. The golden ratio has fascinated one and all like no other number in the history of mathematics. The golden ratio, which is 1.618, can be derived from Fibonacci number divided by previous Fibonacci number. So as you know, 89 is a previous Fibonacci number and 55 is another previous Fibonacci number. If you divide 89 by 55, you'll get 1.618. Similarly, 144 by 89, you'll get 1.618. Similarly, 233 divided by 144, you'll get 1.618. It's a magic number.
Those are all Fibonacci numbers.
Yeah. As you can see, we saw in the previous 89, see this 89, 55, 144, all these Fibonacci numbers sequence.
Okay. Yeah.
And if you divide the number with the previous number, you get 1.618.
Okay.
Now, every ratio must be derived from the golden ratio. Let me show you. If you inverse the golden ratio, that means you divide 1 by the golden ratio, you get a number which is 0.618, which is a Fibonacci ratio. If you take the square root of the inverse of the golden ratio, you get another number which is Fibonacci 0.786. If you take the square of golden ratio 1.618 multiplied by 1.618, you get a number which is 2.618, which is a Fibonacci ratio. So as you can see, everything is derived from 1.618.
Yeah, right.
Any question?
No.
That is why golden ratio has fascinated one and all like no other number in the history of mathematics. It's very, very, very interesting number. Yeah. So now we know the ratios. We'll try to use it in the Fibonacci in trading. Let's see. Fibonacci can be used in trading in two different ways. One is retracement and the other one is expansion. First, we'll talk about retracement. Fibonacci retracements are used to know how far a previous impulsive move can pull back or correct itself before resuming its impulsive move again. So as you know, in an uptrend, price goes, in our previous modules, we know price goes impulsive up, corrective down, impulsive up, corrective down, impulsive up, corrective down, up. Okay?
Yeah.
So we want to know how far the impulsive move can come pull as a pullback or correction. How to know that? Before it will again start the impulsive move. How to know that? At NP Financials, we have very simple 3-step, absolutely no ambiguity in it.
Yeah.
So first thing first, we need to identify impulsive move. For impulsive up move, it has to be uptrend. That means the swing high and swing low both needs to go up. In an impulsive downtrend, both swing high and swing low needs to go down.
So how do you define?
Yeah, that's what I'll show you. That's how I'll show you. Second step, draw Fibonacci from left to right. Always, always, always. Never draw from right to
Yeah.
left. Always draw from left to right.
Right. Okay.
Third step, wait for the reversal. That's what we have done in module 3, unit 1 in candlesticks.
Yep.
Wait for reversal for major Fibonacci retracement level. So can you follow these 3 steps?
Yeah. So I've seen Fibonacci before, and I always wonder like where you draw it from. Is it?
That is why we have done it from the impulsive move. Let me show you.
Yeah.
So before I can show you, write it down: 23.6, 38.2, 50, 61.8, 78.6, and 88.6. 88.6 are the Fibonacci retracement ratios, correct ratios.
Okay.
Everything 23.6. These are percentage. These are percentage because if we got the ratio as 0.618. You remember?
Yes. Yeah.
0.618 multiplied by 100 is 61.8.
Mm-hmm.
Similarly, 0.786 multiplied by 100 is 78.6.
So,
All these
say it again. How did you get the 78.6? That's
78.6 we got after square root, taking the square root of the inverse of the golden ratio.
okay.
The inverse of the golden ratio is 0.618. Square root of 0.618 is 0.786. If you multiply 786 to make it percent, it is 78.6.
Okay.
Similarly, 88.6, the last one.
Hmm.
Now let's draw it. So
Yep.
first of all, this is a swing high, yes or no?
Yes, there's a swing high. Yeah.
And if you change this bar chart into candlestick in your mind's eye, then
Yeah.
probably you will see that this is a bearish engulfing happening high here,
Yes. Yeah, it looks like it.
and here it is a strong bullish engulfing because the
Yes.
because the green body has engulfed this one and this one.
Yeah.
So you know this is an impulsive downtrend because this swing high is lower than this swing high, and this swing low is lower than this swing low. The swing high and the swing low are coming down.
Yeah.
We also know that it cannot go vertically down because it has to do impulsive, corrective, impulsive, and corrective.
Yes.
Now, in this case, this can be defined as an impulsive down move. Forget about the right hand side. When you concentrate only up to this point, forget about the right hand side. When you concentrate only up to this point, you know that this is an impulsive move now going to correction because of this engulfing.
Yes.
So our job, just after seeing this, our job is to identify the impulsive move which we did, and then from left to right, from the swing, write it down. In the downtrend, you need to draw from the swing high to the swing low, left to right, left swing high to right swing low. In uptrend, it is opposite, swing low to swing high.
So from left swing high to
Right
right.
swing low.
Okay.
After you have drawn it much before, after it, then allow price to do whatever it does. You will see this is 50%, this is 61.8, and so this is 78. What does it mean? It means that if this from this swing high to this swing low is 100 pips, for example, okay?
Yeah.
It can be 1000 also, but let's take it as 100 pips, okay?
Yeah.
Then 50% will be 50 points, 61.8 will be 61.8, and 78.6 will be 78.6 from here, okay? That means this is the 78.6% of this impulsive move.
Yes.
This point is 61.8 of this impulsive move. This point is 50% of this impulsive move. Okay.
Yes.
So once the line comes automatically, we need to see what is happening on the 50%. Nothing happened here because there is no, because this fellow immediately did the crack and snap back, if you remember.
Yeah. Yeah.
And then 61.8, nothing happened. Nothing happened means no reversal candle. And 78.6, we saw a harami followed by evening star. Agree?
Yeah. Yeah.
So from here, you can start selling because this is the Fibonacci, which is telling us the retracement is done and dusted here. Price came to 50% and got a support with a piercing and then went up and did a dark cloud cover. exactly at the same point. Came back to the 50 and again did a crack and snap back and went to 78.6, same point, uncanny, same point, and did an engulfing. Can you see bearish engulfing? Can you see that?
Yeah.
Came to 61.8 and is a harami and exactly went to 78.6. Again did a dark cloud cover, came to 61.50 and then did a crack and snapback, went to this and did a biggest engulfing, strongest engulfing, because it has engulfed 1, 2, 3, 4 of them.
Yeah. Yeah.
After this, if you apply the rule of 4, there is no looking back, and
Yeah.
price will come down very heavily, and it went down. Can you see that? So there was no rule of 4 here to go long, go long, go long, go long, go long. No, no, no. That is what NP Financials bar by bar is the best.
Yeah.
You can apply rule of 4 here, 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 and ultimately you will get in all 5 of them. All 5 trades will be positive.
So what about with the third touch of the resistance? It only goes down a little bit. Can you predict that?
No, no, no way you can predict the right hand side. Never.
Yeah. Yeah.
Never, no way we can predict the right hand side, but we will wait what the price is unfolding.
Yeah.
That is why we have seen in the page number 1 as price unfolds. Because price will be unfolding every day. Every day price will be unfolding. We need to see how the price is evolving. Okay.
Yeah, and I guess if your stop loss is okay, you could just wait and we'll just keep...
our stop loss would be here. We'll talk about stop loss later on. Yeah. For the timing, we're talking about Fibonacci retracements.
Yes.
Any question?
No.
So how, if someone has not identified this impulsive move, if someone has not drawn left to right on the impulsive move, he or she is trading blindly.
Yeah.
Because in his chart there will not be any lines.
Yeah.
And he'll be seeing, oh, why on earth it is stopping here.
Yeah. Right.
Because people who sold here, professionals who sold here, got this opportunity at the same level to sell here again, same level. That is why Fibonacci works so well.
So this works on daily, weekly, monthly?
Yeah, doesn't matter the time frame.
Okay.
Time independent.
And it works on commodities?
Yeah. Everywhere.
Okay.
The trader foundation which we are doing
Yeah.
is irrespective of the asset class. It is equally valid for Forex, shares, bonds, indices, cryptocurrencies. Any other question?
So it's just a separate question. How do you trade the bonds?
That's a very good question, but we'll answer that question later on, because all these asset classes are different. Forex is derived from interest rate, commodities is mother nature, and then bond is the actual interest rate, and this is the indices is on the stock, and shares are derived from the companies, management quality, company product quality, and service quality. So you need to do practice on this Fibonacci and retracements in each one of them, daily 5 and weekly 5, so 10 into 8 instruments which we trade, 80 of them.
80.
So how to do it? Let me show you one of them. Try to do it on the Forex only for the time being, because we are doing on the Forex. So price is coming down, as you can see, from this rule of 4, from this rule of 4, and from here to here. We saw that the price is stopping around the previous support line here. Okay. You need to
Yep.
see a Fibonacci. You need to see a swing low. So we got a swing high and we got a swing low. Yeah.
Yeah.
The better example can be this one. So price is going up,
Yeah.
and then price coming down, and put a hammer. Okay.
Yeah.
As soon as this, before we saw this hammer, when price is coming down, we need to draw the Fibonacci from left to right. So this from left to right in an uptrend from swing low to swing high, and then
Yeah.
observe what the price is doing at 23, then 38, and then 50, then 60, and 78, and 88.6. Okay.
So if you're doing to capture an uptrend or a downtrend, it's always left to right. You draw it from left
Always
to
left to
Okay.
right. So now let's see what happens at 38. 23 is generally is not. We generally say if price is not coming to 38, then it is not a retracement. It is a continuation. Okay.
Yeah.
So let's see at 50 at 23 point. It actually got stuck a little bit, but and it did not have the rule of 4 and did a crack and snap back. Okay.
Mm.
So in that case, what we'll do, we'll configure the Fibonacci and take the 23.6 out, because we don't need more lines.
So why? Can you just talk that through again? Why did you take that one out? Because there's not
Because
much activity.
price cracked. Price
Ah,
cracked.
yeah. Okay.
Okay.
Yeah.
Then we expect price to come to 38 or 50. No one knows where it will come. Price will tell us where it will come.
And then you're waiting to see the reaction.
Yeah. So yeah, exactly. Waiting for the reaction. So see the momentum of the price down correction. Yep. This is impulsive. This is correction. Is stopping yes. Roundabout, slowing down.
Yep.
And then we saw a hammer.
Yeah, right.
As soon as we saw the hammer, we'll take the 61 out. We'll take everything out. We'll take everything out, because we need a clean chart. We don't need any clumsy chart.
Yeah.
So at 38.2, we had that hammer, and we can say that Fibonacci plus candlestick has given us an opportunity to buy again here.
Mm.
So we'll buy here on the hammer, and then our stop loss would be here. Our target would be here.
Yeah.
Let's see. And we hit the target.
That's good.
So this way you need to do the daily 5 of them, each currency pair, and then weekly, and then for each of them, and send it to support team. You can take advantage of this good examples which is in front of you. Yep. If you do not have access, please write to support team. They will give you the access.
Yep.
This is beautifully done, and it will give you some examples of how to draw and so on and so forth.
That really helps.
Okay.
That is good. Yep.
This is 38.2 Harami and engulfing. All right.
Yeah.
Can you do this?
I can.
So please do this.
Yeah.
And then send it to support team, and then I'll talk to you in your next class. Before I go, do you have any question?
No. I mean, Fibonacci is pretty new to me, but I'll I'll look at
that
these
is why
examples.
we'll go slow. We'll do first retracement, and then in the next class we'll do expansion.
Right.
Fibonacci extension.
Okay. What's extension? I guess
we'll talk about that later on. First, you do this.
Okay.
Okay.
Yep.
Take care. Bye for now.
Thanks, Bye.
Thanks.